Mr. Sayta, good having you. Thank you for joining in. Is this no bad news equal to good news kind of a scenario, you reckon, on the taxation front?
Absolutely. I think the simplification is a good attempt, almost half the number of words in the current law. Stability is good. We don't want unnecessary disruption. So I think it's more or less similar, no substantive changes. And therefore, I think it is good news. It shows stability, predictability, continuity, and simplicity. They have tried definitely by removing redundancies and so on. So I think it's on the whole a good step.
Right. Mr. Sayta, Shimi was talking about a few additions, like a few hits in terms of, adding regulations with regard to cryptocurrency and stuff. And she also mentioned that there'll be more power given to assessment officers. But what we've seen so far is that, the Income Tax Department wants to, digitalize everything. So what's the reading with respect to both of these aspects?
At least, I mean, we can look at the fine print. I don't think there's any significant change that we saw when it came to the assessment proceedings, etc. At least not something that was jumping up as adverse to the taxpayer. By and large, I think they have tried to streamline the provisions, simplify the law, and make it without explanations, provisos, and so on, remove redundancies. I don't think there's anything significantly adverse even on the assessment front.
Okay, and with respect to, your view, whether you were expecting something more from this new income tax bill, or is it as per your expectations then?
Sorry, I was on mute. Yes, I would feel it's by and large as per expectations. There was never a feel that they would make any substantive changes to the law. It was more an attempt to simplify and remove redundancies. One could have probably seen a little more in terms of trying to ensure better dispute resolution and reducing litigation. But I don't think there's anything adverse in that sense. Could always have been more for reducing the litigation and bringing in more dispute resolution potential possibility.
Mr. Sayta, they've changed assessment year to tax year now. If you've, got the chance to, read through that, can you simplify that for us and explain as to what the change is exactly?
Sure. So currently we have this traditional concept where previous year, the definition of previous year is such that that really is the financial year for which one files his return, assessments happen, and so on and so forth. And the assessment year concept is the year immediately following the relevant financial year to which the income and the taxes relate. Now, this creates an unnecessary confusion, and I think they've done a good thing by doing away with the concept of previous year and assessment year and coming up with one concept of tax year, which is really the financial year to which the income relates, for which the taxes are being computed and paid, rather than have these two concepts. I think that's really a good step in terms of simplifying the conceptual framework of the year to which the tax relates.
Right. Mr. Sayta, thank you so much for, breaking that down for us, and thank you so much for taking our time and speaking with us at NDTV Profit.